David Nicholas is with us, and David is joining us by phone from Georgia. Looking at the overall market, David, would you say that we have hit bottom in recent days, or that we're close to a bottom? Could you say that?
Yes, Stuart. I think we are closer to a bottom, which is a good thing. But the problem, though, is that unfortunately, I'm just not convinced that the rally that we saw yesterday will be sustained. I mean, if you just look at the VIX went up yesterday. It's up slightly today. So while the market was shooting up, so was the VIX. So that's not a good sign. I think there was a lot of short selling, covering going on yesterday. I mean, the good news, though, is that it looks like we have a stimulus bill that both parties seem to agree on. So that's the positive. I think that's what we're seeing markets move this week. But the bad news is, unfortunately, there's still a lot of bad economic news that's coming around the corner. I mean, I can't even imagine what the weekless jobless claims are going to look like tomorrow. So it's hard for me to say that we're near a bottom yet. Mainly just because
I was just going to chime in there, David, that tomorrow. I'm sorry, there's a dreadful delay we have to deal with, but I'll deal with it. The terrible news that's coming tomorrow morning, David, is that there's going to be well over 1 million first-time jobless claims. Now, those numbers are announced at 8:30 Eastern Time. We'll get the official number at that point. But it's going to be quite a shock, I think, both to the markets and maybe to investors as well. What do you think? I've seen numbers of maybe 4 million initial jobless claims tomorrow morning. That would be a real shock to the market, wouldn't it?
It absolutely would be. And when we do our modeling at our firm for are we heading for a recession or not, the weekly jobless claims is a big part of that model. So I think a lot of models are going to be flashing red tomorrow. But Stuart, I think there's 3 things that need to happen before we see a bottom. Monetary policy, which we've already seen. The fiscal policy, which I hopefully we'll see this week. But lastly, it's really just there's got to be some assurance that the virus is contained. We've got 2 out of the 3 in place. So until we get that certainty on the virus, I just think there's going to be a slew of bad news. I think sentiment's going to change. So in the short term, right, we're really talking about the short term. I think the short term is going to be ugly. But I am very optimistic when we look 6 to 9 months to 12 months out. My money is on the ingenuity and the resilience of the American people. We're going to get through this, but we got to accept that it's going to be ugly in the short term. And so I just don't see markets continuing to trend up when we have a slew of bad news coming out. If you look at a company like Target, for example, Target moved guidance down today. Their stock's getting hammered today by 7%. I think we're going to see more of that. We just don't have the information yet for where these companies are at. But as earnings start to come out, unfortunately, I think we're going to see more volatility.
All right, David Nicholas, we wish you well. I know you're cooped up in the house with your children. And again, we hope you're doing well through this. Thanks very much, David Nicholas.
Thank you.